right, so this is going to be our real estate comparison. We're looking at Medical Properties Trust. We're looking at Well, which I forget their name. I think Wellington or something like that. And then WPC, WP Carey, where we are now. Really interesting. Both MPW and Well invest heavily in healthcare real estate. And I've always been interested in the healthcare real estate game. Like I said, I've followed Well for quite some time now. The big difference between Well and MPW is that Well is United States, Canada, and the UK, specifically London. MPW is just all over the place, Australia, Spain, Europe, not China, Africa, or Middle East, but Europe, Australia, United States, Canada. I think they may have some stuff in South America. I'm not sure. But the point is that they're kind of all over the place. Which for me is a bit concerning. The reason being is because it's one thing to keep up with the economics of the U.S., but when you start talking about the economics in all these different countries, I mean, something as simple as like, oh, this country got kicked out of the euro or whatever, sometimes plays a big part in the stock price of these companies. And so that's something that I always kind of side eye, right? And I really kind of look at before getting into a company like that. And I definitely do my very best to do as much due diligence as possible, specifically concerning the operations in those other countries. Sometimes you come to find out that like 80% of their properties are in the U.S. and only 20% are outside of it. And then you're like, oh, okay, well, it's not, not a big deal. So you never know, man. Like I said, heck, 90% can be in Spain, right? And I don't know anything about Spain. I don't know about Spain economics. You know what I mean? I would have to go and figure that stuff out and then keep an eye on it. You know what I mean? So anyway, I threw Whale in there just because, like I said, I've always liked the company. I've been following it for a long time, and so having the opportunity to possibly get into it would be really cool. But the main concern here is comparing MPW with WPC. So first things first, MPW stock price way down. Okay, and so again, we're talking about cash management. So we're talking about I think we got WPC. We're up 15%, so I think we got it at like, I don't know, $70, somewhere around there. And so, but we don't have a lot of shares. So like, but like, $700 divided by $20 a share means that, we can get like 50 shares or something. Well, not 50. I can't do math right. But you get my point. Like, we can buy more shares of MPW for the same price that we're spending on WPC. So that's kind of cool. All right, dividends. Wells dividend compared to these other guys, way down. Again, sometimes that means that the stock price has gone way up. Let's take a look. And that is definitely the case. I mean, from 52 to 87. I mean, I can't imagine how the price got down that far. I mean, like I said before, you're talking about healthcare real estate, and like I don't know. I'm trying to figure. I don't know. That's weird to me because it's hospitals. Whatever, man. I don't know. All right, so the PE, of course, is going to be much higher for Well because the stock price was just going through the roof. But that means also that earnings have probably stayed a bit flat. MPW is going to be the cheapest of the three. And again, this is a personal bias. I bet you that has a whole lot to do with the fact that they're in all these other freaking countries, but whatever. So let's see, 5-year high. MPW is really close to their 5-year high, actually. Well, not so much. So that's really cool to see. And then you got WPC, which is you know, barely off of their 5-year high. So that's really good. Looking at the 5-year low, MPW is way above that. Well is way above that. WPC, I'll say, is not so far off their low compared to the other two. Compared to the other two, I mean, it's like 4 times. This was only like twice. So, what that means to me is just that, comparatively speaking, MPW is a really cheap stock, meaning probably that you don't have a lot of confidence from the market. There's not a lot of people buying into this thing. You know what I mean? Now, the market can be wrong, but guess what? It doesn't matter. It doesn't matter at all, because it could be the best company in the world. It could be making the most money, but if no one buys the stock, the price doesn't move. That's just the way it is. All right, so average PE. So it's not far off its average. Will is a bit above its average, and then WPC is right at its average, meaning that it's about what it's always been. You know what I mean? Like it's not high, it's not low. It's about where it's always been. Wellington is a bit higher, right? Again, because of that big price run up, and then MPW is a bit higher, which actually gives me some warm fuzzies, because I was concerned about the PE being relatively low. So difference, WPC is a bit below. Well, it's like I say, a little higher. Then we got MPW right there. So the net profit, again, MPW is going to be comparative to Wellington, and so I think I'll do a deep dive on these two to figure out why the heck the net profit is like. Well, I have an idea. So let's see. Yeah. So Wellington is a REIT, and so all of their profit flows through to their shareholders. So I think that's what's going on here. I'm almost certain of it. And so WPC and MPW are about the same. A little different, but not much difference. Nothing there. Return on assets, the same. Wellington has a lot more cash on hand. That's kind of cool. Wow. So here's the thing. So Wellington has a lot more cash on hand, but they have a whole lot more debt. And we know that because the difference between the cash and the cash debt ratio is staggering. And so there's definitely something to look at. We like the cash, but that cash can be erased pretty quickly if they have to then pay off some debt. Short interest is about the same, nothing really to see there. All of these companies, other than MPW, is a little bit off their high, not much. It is important to note, though, that Wellington, again, stock price has skyrocketed, so they're off their lows by quite a bit. So the alpha looks like MPW has a better alpha, which I did not expect. Up move goes to MPW. Down move actually goes to, oh yeah, goes to MPW. I almost got tricked again. The smaller number is better for down moves. See, MPW has a better beta, and they have a better average return. Volatility is the same. We see that the score is better. And then, of course, Wellington has a better management score. We talked about that before, primarily due to the cash on hand. So the thing here is that Wellington, again, stock price is going way up. The PE ratio, much higher. So we're talking about a more expensive stock, right? More expensive. Um, WP Carey, I really like the company. I really do. Um, is MPW a better buy? Is the question. You know, at first look, uh, it's definitely cheaper, right? Um, definitely cheaper. Has better numbers pretty much across the board. I mean, not 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 crazy better, but better. Um, and then everything else stays the same. So what I'm gonna do here, this is tough, man. It's tough. I mean, WPC is a good company. I like WPC. Um, and there's no reason to come out of it other than the fact that MPW may perform better. May perform better. And looking back over the last, like 2 years, I think you can say, right? Um, WPC has actually performed better than MPW. Wellington's a great company. It's actually the largest healthcare REIT in the world, the largest. No one else that owns more hospitals um, than Wellington. But it's expensive and the dividend is not great. And um, but it's yeah, it's expensive, but then compared to MPW, it's not that expensive based on where it is in its own range. Um, Let me explain that because that didn't even make sense to me. So the for the last 5 years, right? Wellington has been up to 58, so it means the PE has been even higher than what it is now, right? Um, and same goes for MPW. And the problem though is that like when you look at the numbers just like this, that 27 versus that 50, I'm sorry, yeah, the 22 versus 27 compared to the 49 versus 58, you're like, well, it appears that MPW is just a lot cheaper. But then when you look at the difference between its absolute high and where it is now, it's like, well, they're pretty much in the same range. I mean, 48%, 37%, not that far off. Of course, Wellington's going to be a bit higher just because the price is going up so much, but MPW is kind of right there. So in actuality, MPW is just as expensive as Wellington compared to itself. You know what I mean? WPC is cheap for the most part, even though PE ratio is higher than MPW. And that's why these numbers are important. Um, and there's just really nothing else to look at, honestly. I mean, like I say, Wellington has the cash, largest company. Cash is a good thing. Whether or not cash is going to be important going forward, again, I don't see a COVID drop happening again for the next at least a year or two. Still saying those things, but it's hard to see it happening again. So whether or not that cash, that management score will be, it hasn't been so far. You know what I mean? Only this past year was the M score even looked at. So what I'm gonna do is more for fun than anything else. I'm definitely going to do a deep dive on MPW and Wellington because both of these companies are in the same industry. They're both in healthcare, real estate. One is more closer to home than the other, so I'm really curious to see how that works out. The other thing I didn't mention, when you do have businesses in all these different countries, you also have what's called um, what's the words? Transaction risk. That's not it. Foreign exchange risk. Foreign exchange risk. Meaning, if you're making euros, right? When you do your accounting, you have to take those euros and convert them to U.S. dollar in order to report your report your earnings, right? And so sometimes what happens is if the euro falls in value, then all of a sudden you're losing money. You know what I mean? Just because of the foreign exchange thing. Now, I've had conversations in the past um, because so the argument is this: like in reality, right? So you have a hospital in Spain, all right, and to be honest, I'm not even sure if I'm sure Spain is part of the eurozone. So let's say they're receiving euros in rent for that hospital in Spain. Well, the truth is they don't they're not necessarily then taking that cash and exchanging it for U.S. dollars like right away. Like that's not what's going on. And so a lot of times that foreign exchange risk is just on paper. It's not a real thing, you know. Um, but it does affect the numbers, and the numbers is what makes the headlines. And we've seen over and over again over the years that those numbers make a difference. It can drop the price, it can raise the price. Um, so, so I'm definitely curious to see that. Um, WPC, WP Carey, again, it's a company that I really like. I forget how long we've been in the position. Seems like forever, you know. I've really come to know all of the characters in the earnings calls. As far as like the CFO, the CEO, and those guys. I've read a lot about the company, going back and looked at historical stuff, looked at interviews with the CEO to understand kind of what the company's mission is and how they work and what they do. So I have a emotional attachment to this position that I do not want to leave, but also understand and I'm reminded that this is not about emotions. You know what I mean? And so if I can sell this thing at a 15% profit, even though it's a smaller position, um, you know, um, I think I have to take that 15% profit, only if it means though getting into a better position. You know what I mean? Um, and again, we talked about cash management, so selling something at 79 and then buying something for 20, kind of a no-brainer. So yeah, so I'm gonna do a deep dive on MPW and Wellington, and then I'll decide which one to go into from there because I think we definitely um, have to get out of WPC. Even though, man, like I said, WPC is just cheap compared to itself. Mm-mm-mm.